السلام عليكم ورحمة الله وبركاته. Hello. Good afternoon.
Do you hear us?
Yes, good afternoon. We can hear you.
Thank you. السلام عليكم ورحمة الله وبركاته. أرحب بكم في الحلقة النقاشية لشركة الغاز الوطنية لعرض البيانات المالية بنصف السنة المنتهية في شهر 6 2024. نترك المجال للدكتور رشيد نقاد الرئيس التنفيذي لعرض بيانات شركة الغاز الوطنية لكل المساهمين. فليتفضل.
Assalamu alaikum wa rahmatullah. We will do the presentation in English. We have tried to translate the presentation in Arabic. Then we have a two version here in the screen. Well, the purpose of this meeting is to share with you, shareholder, a little bit the numbers of H1 24 and where we are today. We will give you a little bit some information regarding the market condition challenge still in Oman and outside what we are facing. The second part will be business overview and financial figures and performances. And I think the most important session for us is to get your question, and we will answer as much as we can in this call. For challenge today in Oman and even in Malaysia, it's mainly, I think, the margin pressure. Margin pressure is the same of domestic. Second challenge is also the oversupply of LPG, and the realization has been dropped since the last 3 years. We are trying to mitigate this drop due to, I think, excess of product today for the bulk in the market. We are close below 10% margin for the bulk. We are the leader today in the bulk in Oman. Slowdown of engineering project business. There is not so much a project ongoing. The only development zone today in Oman, industrial part, is mainly Sohar Free Zone. And we are involved in many new projects, but as a new project, it takes time to be materialized. And the only small job projects ongoing, it's maintenance, and so we are doing. LPG quota, we are raising the point at the ministry level to increase our quota because we are increasing in bulk, we are increasing domestic, we need a little bit more. Today, I think the ministry is facing a challenge about a Liwa plastic startup who is taking a lot of product also from Sohar refinery, and they are addressing this issue. For unethical business practice, I don't want to come back on it. It's still undergoing. I think small players are still trying to survive and doing this, which is exactly contrary for our safety and expertise here in NGC Oman. Project business has largely become today mainly capitalistic incentive with ROI becoming less feasible in Saudi for our engineering entity. The status of initiative, I think you have heard about the new regulation. It makes a lot of noise. MOCI has launched a new branding regulation without any price increase. This branding regulation, I think a lot of people believe that it will be growth, increments, margin improvement. It's at all not this. It's mainly to clean the market by putting a color on a cylinder branding, which has a cost for all the players. We are discussing with MOCI about this point. We will come back to it, I think, after to the MOCI. Initiative initiative from cylinder sales to shift product mix. We are doing it also for bulk, for lubricant. We are launching. Engage MSCI also in training and so to reduce this unethical practice. And we have really drastically also optimized our operation and limited our capex spend to be more and more profitable in Oman. Do you have here? You have the Arabic version. For MOCI to be in the branded rule, to be more precise, on 28th of May has been issued with new regulation. Implementation will be 1st of December, normally after 6 months. We have MOCI has organized a workshop on the first week of August to explain this rule to all players. There was 28 companies around the table. All the 28 companies raised many concerns, many problems, many issues. For one point, which is the most essential, there is no price increase. And every company is complaining, we cannot afford to have these investments without a price increase, which today MOCI is refusing and Ministry of Commerce is refusing. The last outcome from the workshop, we have raised these points. We have also proposed 17 actions to the ministry. 11 companies has write the same letter, and it will be sent this week to the ministry of how we can implement this rule, but we need some counterpart. Counterpart is mainly one of the main, it's a price increase. For your information, we have done our homework like the other player. The branding cost is roughly 1 million riyal per year for NGC. Means for 3 years, 3 million riyal. 3 million riyal of capex investment without return, it's a little bit challenging. It's why, because painting, changing the valve, putting a brand and so, everything has a cost. And this, the cost for me without increment of price, it's a little bit challenging for the company. It's why a little bit we are not against the new rule, but we need some compensation from the government. In Oman, I think we have seen a strong improvement of performance. First one, the volume and revenue are lower than last year, mainly in bulk, because we got this quota issue. We didn't get any since September last year. The quota has been reduced, as I told you for first one. But nevertheless, we have maintained and perform and maintain our margin. The second one, it's a better gross margin versus last year, even the volume has dropped. And why? Because we have done a very strong customer selection, portfolio management. All the customers with low margin in bulk, we stop them. And the last one, optimization of cost, result, and better bottom line. We have done a sophisticated process, optimize the process, optimize the operation, reduce the people, and even the increment for many people was very low. Improvement of performance is here. Driven performance has been taken by profit driven by this mixed strategy. I told you, analyze business segment to focus on more profitable offering, which is a lubricant for us, which is a really good bulk project. And we have tailored our fixed model to align with high margin opportunity, which is seen in the numbers. Efficiency cost, I think all departments has done their homework. Implementing measure to reduce the cost for transport, we have improved our efficiency. We have reduced the number of overtime. We have reduced the number of people, the GNA also. And I think today, NGC Oman is really streamlined and processed, and we have also changed the ERP this summer. It will be fully implementation by Q4, which will bring also more analytic, more efficiency to control the cost and the process. For the expansion opportunity and initiative we have done these last 6 months was mainly concentrate as we have, about this modern truck rest area. this truck area is in Khazain. It has started. Operation started 1st of July this year. We have 2 months of working session since the vegetable market has opened. We are in a transition phase of implementation this new model, and the project is, the tendering will be issued in September, and the construction will start in Q4 for the rest area. The first feedback we get from vegetable market, from the trucks and so, is much better than Mawaleh. More services. We are providing parking, Wi-Fi, restaurant, security, and we are managing the token with the vegetable market in symbiose with them. I think it's a good experience for both of us, and we will build the truck in the second half of next year. Malaysia, we are entering in a diversification milestone. Solar has been given the first results last H1. We have implemented 21 solar projects, mainly small scale, to understand the problem, to understand how to sell the energy and so on, and to get the license. And finally, we get the license for solar in Malaysia. Gas pipeline, we have evaluated 14 companies. We have analyzed them to open the pipeline project, mainly with a Gas Malaysia company. And we have found one subcontractor. We are working with him today as an EPC contractor. We signed a contract of 10 kilometers of gas pipeline. It's a first start of diversification also for us. Gas Malaysia has given a roadmap to do 100 kilometers of pipeline in the next 5 years. We are part of this engagement also. Last but not least, is the most important for us. We are shortlisted, as I told you last time, for the 2 LPG license in Saudi. Saudi market, it's 100 million cylinder per year of filling, plus 300,000 cubic meter of bulk for industrial. We are engaged in these 2 licenses. We have found today a good partner, I think, a financial partner who will be engaged with us. We cannot disclose today because papers are not signed fully, but I hope by Q4 we can announce it officially. What I can share with you is that we are preparing the bid proposal, and it must be submitted in October. The result from the Ministry of Energy will be given in January 25. Most likely, we need 18 months to build the plants in Riyadh or Jeddah or Dammam, depending on what we will get as a license. Then full operation will be in 2 years from now. This is what we will expect, and it will be a new company in Saudi with a new partner, mainly to do the same model, copy-paste of Malaysia. It's a bigger model than Oman. To the figures, financial results, year-to-date June, what we have published in Muscat Stock in last month in July. For the parent company, as you see, our revenue has dropped by 19%, mainly to the bulk, to the volume effect due to quota issue. But nevertheless, our profit has been increased by 6%. Means we have done an efficiency of roughly 25%, which is a big improvement of a company. The capacity of generating gross profit by having a better mix on the customers. Administrative selling expense a slightly increase, mainly is a shifting, but roughly we can say we are at the same level like last year. Efficiency is here. Operating loss has been improved slightly, and as a profit before tax, we are at the same level, even we have 20% drop of the revenue, which is we are at minus 82,000 profits loss after H1. It's better than our budget. To be honest, our budget was around H1. We was planning to be at minus 100. We are a little bit better than the budget in H1. At a group level, you see the growth of the revenue. Today, we are roughly close to 14 million Omani Riyal. mainly due to Malaysia because it's a CP variation also. You know, in Malaysia, we are an international price. And volume. Now, all our strategy in Malaysia of putting hub, getting market share, and so we have increased our volume in domestic by 4.7%, which is reflecting here also in the revenue. Gross profit at group level has been improved by 7% also, which is a good significant milestone for us. And finance cost has been a little bit increased, mainly to do some shifting in Malaysia. The subsidy coming most likely light by 2 months. We need to pay some interest. This is the finance cost. And profits after tax, we are at minus 100,000 Omani Riyal, below last year, mainly due to this cost increase of transport in Malaysia. And as you see in the other income last year, there was a one-off of 200,000 Omani Riyal, which will not come anymore this year. It's also impacting us. If we normalize, we are much better than last year. I think I explained this, the revenue or gross profit, as I told you verbally from the P&L wise. Saudi or Oman? Saudi overall a better performance than last year. I think also we have a better team now. We set up the head office in Riyadh. We have now 3 branches, Dammam, Riyadh, Jeddah, fully effective. Technical team, sales team, and the head office in Riyadh. Revenue is the same level as last year. Book order is a little bit slower due to competition. We have also a strong competition now because, as you know, advertising of Saudi is bringing a lot of Egyptian company, Jordanian company, Indian company. Gross margin is achieved more than last year due to faster competition, recent award, project efficiency, and cost management. And admin and G&A has increased due to this new organization and mainly the head office setting. And we are focused on faster execution today for the things. And the good prospects, as I share with you, we are concentrating also in LPG license. Malaysia, I share with you that we are very happy that the volume is growing. We are getting market share from Petronas mainly. And I think the revenue of 10% higher, it's only a mechanical part of it, 6% is coming from the CP change from last year. Gross profits better than last year also because now we are more efficient in the volume, and overall admin and cost is under control. And we have also started a restructuring process in Malaysia to be more efficient in admin, and finance cost is a little bit higher due to this subsidy government shifting sometimes. Instead of getting the subsidy by end of the month, sometimes we get it in 2 months after only. This is the global overview, what we want to share with you after this H1. We have a perspective of transforming the company by a new initiative and so on. I think some announcement can be done in Q4 as much as we are working on it for Oman, for Malaysia, and for Saudi. Thank you for your time, and we are here now to take your question. Any question from your side?
Yes.
Hello.
Yes,
Hi.
please.
Hi, good afternoon. This is Joyce from United Securities. Thank you for the presentation. I have a few questions. The first one being on the decision from MOCI, and you briefly touched upon this. Can you be a little more elaborative on different phases and facts of this decision? Because we've been asking for price control, price increase, but what I understand is the ministerial decision said the price increase will be decided by the MOCI on an annual basis, and that will take the advice from Ministry of Finance as well. So is that correct, or will there be any potential for price increases next year? Is that a possibility?
Today, to be honest with you, the last workshop, it was first week of August, after this workshop was being organized by MOCI to explain this new regulation. I think MOCI was a little bit surprised by our point raised by 28 companies around the table, saying we cannot do branding if there is no counterparts. Counterpart means we will spend money to paint, to brand, to regulate, to bring safety to the country, but we need 0.5, what we're asking, half rial per cylinder. As you know, today, from officially the price for us to sell to the dealers, it's 1.9 rial since 30 years. 30 years, same price. And even today, due to competition, due to so many players on the market, we are more close to 1.7, not 1.9. By competition. We raise the points, you need to support us to survive. And all people, dealer, bottler, distributor, everybody is asking the same. I think MOCI is taking the point. Now, around the table was Minister of Finance, was OQ, was Civil Defense, was a lot of stakeholder. Everybody is aware about the critical situation about all player LPG in Oman, that it cannot be like this for the next years. It will be difficult for everybody. Asking me, it will be an increase in 25, I don't know. It's a financial impact on the government level. It's a decision of MOCI and Minister of Finance. It's not in our hand.
Yeah, I totally understand that, Dr. Rajit. But my question is, what is your feeling on that? Were they more receptive, or were they saying a blatant no to that?
I think it's one good point has been changed in the last 5 years. This is also people who are older than me in this table during this workshop, that it's the first time also we have all parties agree on it, agree on the facts, agree that something need to change. And I think the message was really communicated very clearly. And as I told you, 11 companies raised 17 points of improvements signed by 17 CEO to the ministry this week. I hope they will listen to us, and probably they need a little bit time to think about it. We can see something perhaps middle of next year, not before.
Okay.
This is our hope.
Got your point, Dr. Rashid. Thank you. Could you please remind me on the pricing structure in the market, that what price are you getting it and what price are you selling it, giving it to the distributor and the distributor prices? Can you just remind us of this?
To make it easy, our cost is the same for everybody. We are buying from OQ at the same price, 61 rial the ton, delivered from Rusel, from X-Works, from the refinery, mainly 2 refineries today, Sohar refinery or MAF, but 90% of the volume of Oman domestic is coming from Sohar today. You add on top of it a transport costs to Rusel or to Sohar or to Nizwa, to our plant, plus distribution fees, which is today our margin is close to 5% maximum. This is the cost structure. After that, the distributor is taking another 1 rial, where he's making 400 beza, and the last miles is taking 1 rial. At the end, at your home, you are paying 3.5. Now we sell at 1.7. In between, there is 2 players. The problem in Oman, you have too many players. In Malaysia, we don't have this cost structure. And in Malaysia, we have international price, means the value of the price is higher than here by a factor of 5. And even when you compare to Saudi, you have a service charge, you have a price a little bit higher, and so in Qatar is different. In UAE, it's an international price. I think our price compared to our cost, it's close today. We are close to zero margin. If you don't have a strong efficiency, if you don't have a big volume, this business bring no margin. I'm speaking about the domestic only cylinder, not the bulk. Bulk is a different story.
Okay. So if I understand that correctly, we have a 22 kilo cylinder. So average cost per cylinder, your procurement cost will be around 1.35 riyals, and you will be selling it at 1.7 riyals. Is that correct?
Yes. Yeah. Yes. For the gas wise, yes. The most part of our cost is the gas. We are paying OQ. This is the most cost.
Okay. This is 1.35 that you are paying.
Yes.
And then you're adding the distribution cost and everything, and then that is sold at 1.7 riyals.
Yes. Yes. I'm not adding my finance cost. I'm not adding my depreciation. I'm not asking a lot of things which become to me negative.
Yeah, I understand. And these were fixed 30 years ago.
Yes.
Yeah. Okay. And can you tell me how many players are there in the market?
Today we have 28 players for 5 million population. In Malaysia, to make a counterpart, 8 players for 14 million.
Okay.
You have too much player in this country. So the problem is you cannot have SOG player and local player. It's not the same cost. Compliance, cost, safety, and so we are not playing with the same rules.
Small player versus big player cost is
okay.
And mainly, to be very transparent, I think we have written it, unethical practice is helping the small guy to survive.
Yeah, you have been mentioning it many times in the past as well. I understand that. So another aspect that I had needed a clarification was on the branding of these cylinders. Right now, there is a lot of clarification that is required for branding. So I was just looking at. Can you just start by providing us any statistics that is available on the number of cylinders in circulation in this country, who owns this currently, and and how much do you have? National Gas has, and on, who has the most number of cylinders in Oman.
Today, the point of assets, it's very totally different from Malaysia to Oman. I give you the example. In Malaysia, we are injecting each year a lot of money to buy new cylinder, to maintain our market share, to replace the cylinder which is expired, and to gain new customer, which is part of our core business. In Oman, it's totally different. The owner of the cylinder is the end user. It's you. It's not me as a bottler. Then, who has the most cylinder on the market? No one. No one. Muscat Gas or us or Yamama or any gas, no one is the owner of the cylinder today, practically, legally speaking. Because when I enter in Oman in a new apartment, I buy 2 cylinders, 30 riyal, 30 riyal. It belongs to me as an end user. Now, the ministry, he wants to change the model from ownership by the end user to ownership by the companies. But to do that, you need a transfer of asset, a transfer of legally speaking. They want to do it for free. We cannot do it for free. This is the problem. Branding has a cost. I need sandblasting, I need a good painting, I need a marking, and I need to change the valve, and I need to put it in circulation for the next 10 years. This cost is 4 riyal per cylinder, which costs for us, we have done our internal calculation, 1 million per year. Investment for 3 years to brand what we need to do to maintain our volume of business in domestic. which has a cost, 3 million riyal, return of investment, 0. If I want to compensate these investments, I need to increase my market share by 28%. There is no option. I can increase my market share by 28% to have a proper return of investment. This is why the model is blocked.
Okay. But this demand has been there from the bottling companies for quite a long period of time. You guys were asking for branding of the cylinders, and the MOCI has permitted that. But right now, is it the issue is on the structure of this ownership transfer?
But there is a question, we raise it at the workshop, how you can guarantee the ownership transfer. They say, if I have a cylinder gray, you come to me, you give me a Mira one, which is our brand, yellow one, for free. Why should I give it for free? I cannot. Nothing is free in the life.
We were asking the
Price hike also, along with
we were asking two things.
We were asking two things.
Well, basically, we were asking two things to the government: pricing, restructure of the pricing system, and rebranding. So we got only the rebranding without the pricing. So that is the issue.
Exactly.
Okay. And see, you are a bottler and you are selling it to the distributor. So there could be, what's the possibility that the distributor will come back to you, for refilling this? It can be sold somewhere else, right? So do you think about, have you ever thought about an integrated mechanism where you get a distributor license as well, and then reach out to the end user, ultimately, and direct retailing? Is that a possibility?
Possibility is on practical, we can do it because there is a model, we are working on it, of having a distribution channel, having our own truck, having our vending machine, having an app like everybody. But the ministry, he don't want to go in this direction. He wants to separate, to segregate bottling, distribution, and last miles. As you know, last miles mainly impact a lot of people, small player and so, which impact the employment also. Then it's a sensitive subject, but our role as a bottler, we want to sign a contract with our distributor. With this distributor, we will engage safety, we will support them, we will inject cylinder, we will also give them a lot of financial support like we are doing in Malaysia, but they are committed to us. Means 95% of their volume they will take from me, and 5% they can take from Mr. Mukesh, my competitor, as a safety if something's happened to me, which is the normal best practice in 82 countries in the world today. It's a support of the distributor. Our role is not to distribute. Our role is to bottle properly and also to minimize the interface with OQ. If you have 28 companies going in OQ, it's too much for OQ also. This is the difference between the other countries. Normally, refinery like Aramco, we are in discussion now for the license of Saudi. Aramco don't want to have more than 2 companies coming to Aramco sites. They don't want to give license of filling more than 2 companies. Gasco plus a new one. That's all. They don't want to increase. Here in Oman, we have 28 companies. It's too much.
Okay. Okay. And see, I have a few more questions, but I see other hands are raised. So I will take a leave and then I'll go back in queue so that others also can ask questions.
Thank you. Thank you for your question.
Thank you.
Vision Capital.
Hello, am I audible?
Yes.
Hi, good afternoon, gentlemen. This is Bishan Bhalla from Vision Capital. Thank you for the presentation and for the answers so far. I just wanted to follow up on a few queries raised by Joyce and some of my own. Now, just to get some perspective, you mentioned this branding would one of the key concerns is the transfer of ownership. So currently, the end user owns the cylinder. We understood that. Now, going forward, they're saying come up with new cylinders, which requires a capex, like you mentioned, 4 riyals per cylinder, 1 million riyal per year, and 3 million riyal for 3 years, right? That would mean effectively 250,000 cylinders per year. Is that the way to look at it?
So there is two parts. Today, if we enter in this new regulation and we apply it 1st of December, we need to spend only branding costs. It's not the cost of the cylinder. The cost of the cylinder is roughly 20 riyal. New cylinder on the market today, when we buy it, it's roughly 20 riyal. We say the old cylinder, he can have 1 year or 9 years. Existing cylinder, which is gray color. I will take them in my plants. I will sandblast it. I will change the valve. I will test it, high pressure and so on, paint it, put a brand, and put it back in the circulation. The MOCI is asking us to doing this job for 4 riyal per cylinder for free for the end user. He give me a very old, bad cylinder. I give him a new cylinder for free. This is where it's the problem. And this costs, it's 1 million riyal per year for NGC only. For the other player, it's another amount. Each one need to spend to maintain his market share on the business existing.
Right, understood. Now you mentioned 20 riyal is the cost of cylinder. I believe when the announcement was made, there was some mention of taking a deposit of 20 riyals from the customer. Now that covers the cost of the cylinder. If you could just elaborate on that part.
It's not for the existing, it's only for the new cylinder, the newcomer, new customer.
Right, right. So if there's a new building and I go and occupy a place in that apartment in that building and I want a cylinder, I effectively contact you. You guys come over and I pay you 20 as a deposit to get this cylinder. Now the issue is that you'll have to give me a new cylinder going forward. The cost to brand that cylinder is 4 riyals for the blasting, painting, etc. But you're not being compensated for that. You're effectively spending 4 riyals from your own pocket, but there is no way to monetize this sort of incentive by the ministry. Yes. That's where the challenge lies, right?
Exactly. Yeah. You get it.
Right. Understood, sir. Now you mentioned that the 28 gas companies came on board, made a common stand and asked for a price increase of half a riyal per cylinder, right? Now, as Joyce and you discussed, the cost from OQ to uplift mainly from Sohar is 1 riyal 350 paisa. Your selling cost to the distributor or the truck that comes outside my place is 1 riyal 700 paisa, right? So you make 350 paisa on this. You've asked to increase this 350 paisa to 850 paisa effectively, or is that the way to look at it?
No, 1.350 my gas cost, plus I have to incur transportation cost, filling charges and all these things. So currently my margin is around 100, 200
your sourcing cost is 1.35, your selling cost is 1.7. I completely understand.
But in between there is a cost. No, 1.35 is my purchase cost. There is a transportation cost, labor cost for filling the gas, HSE cost, other costs are there. So my margin is around 100 to 200 paisa, which we are asking to increase to 700 paisa.
Correct, exactly. So whatever your overall, so when I said 1.35, that's the first cost or the input cost, and you have added cost. That so effectively whatever your overall let's say selling prices. Let's look at it either ways. You're effectively asking for a 500 paisa increase, which would ideally be a straight flow through to the bottom line. Because there's no associated cost you have to incur. I'm just trying to get the sort of working right. And then you can dwell. Fair enough. Okay. Now, having said that, I would imagine there are two ways to look at it from the government side. One is where they tell the distributors that, listen, you cannot sell above 3 or 3.4 riyals. Or the second is where they say, okay, if there's a flow through, it has to flow through to the end user, where if you effectively sell it to the distributor at 2.2 from 1.7, he comes back to me and instead of 3.4 or 3.3, he charges me 3.8. And that's where the disconnect is in terms of the concern from the authorities. Is that correct?
Today, today, I think you have two points. Point number one, officially, the 22 kg price end user, it's 2.5 in Oman by law. By law, it's 2.5.
I've never paid that much, sir.
Yeah.
Okay.
Yes.
Then by law, it's 2.5. You cannot sell a cylinder by law more than 2.5 in Oman as end user price. Between 2.5 and 1.7, you have what? You have 800 paisa. This 800 paisa margin is divided what? 100 paisa for me as a bottler. Okay. 300 paisa for the distributor and 400 for the last miles. But in reality, what's happened? It's 1.7 versus 3.5.
Correct.
Last miles is doing 1 riyal.
Ad hoc cases more. Right.
The last mile is doing 1 real margin, and the distributor is doing 0.6, 0.7, and I'm doing still 0.1. For me, nothing changed. This is the question. And this is where today we are in a bottom line. As a bottler company, we need an increase of price to survive, to compensate 49% of increase of transportation. I give you one example. When we hire one employee operator in Sohar 30 years ago, salary was 70 riyal. Now we are paying 420. 420. This increase we have absorbed.
Got it. So I understand, and I don't want to dwell on this longer because I have more segments, but I appreciate the answers. Now, having said that, this is on the retail side, right? The home to home. You said your main business in Oman would be the bulk supply. What about the pricing over there, and what are the dynamics over there? How does this impact, or this is only for the retail end user, single user segment, and the sort of corporate or the bulk?
Yes, bulk. We are the main player in Oman in bulk. What's happened the last 5 years is that the price of bulk has divided by 2. Reduced, divided by 2, okay? Roughly. Which is a benefit to who? Benefit to the end user, industrial company. Why? Because at that time, there is so easy. You can buy a truck, $100,000. You can have a license, and you can go to OQ and take bulk and start delivery without license.
Wow.
Competing against us, against the big guys. This is what's happened, which dropped the margin because there is no barrier of entry. Everybody can do bulk in Oman, which dropped drastically our margin. Our margin in domestic is quite stable since the last 3-4 years, okay? Even it's low. But the margin on bulk was more impacted due to quota available, product available, accessibility to OQ refinery, and accessibility to the market, and no barrier of entry. It's why in the new regulation, one positive point we have seen, it's a new license for the bulk. We see it as a positive move from the ministry, and we are with it. And I hope it will change to reduce the number of players in bulk also, to provide a better services also.
Correct. So all the guys who are operating without a license will now need a license, which means the guys who are unlicensed might go away, right? Okay, got that.
We hope.
In terms of the discussion, Ministry of Oil and Gas, you keep pointing out you've been constantly in touch with them in regards to increase in gas prices. That's on the bulk side, or is it again on just the retail side? If you could just elaborate that.
Price is same for all the products. Bulk or retail.
Today the purchase price is the same in Oman. Okay. Domestic or bulk is the same. Okay. Okay. But the cost. Yes, please.
Please go ahead, yes. No, please go ahead, yes. The costs have gone up.
Regarding the Ministry of Oil and Gas, when they're talking about increasing the gas prices, that is not LPG. Our regulator is the Ministry of Commerce. So the price managed by Minister of Commerce. Oil and gas, they will be talking about natural gas, more likely, just to correct you.
Okay, got it. Right. Sure, understood. And in terms of, you mentioned supply constraint on LNG. Now, effectively, what has happened is the demand has gone up, but you have a quota of how much LNG you can offtake from OQ, and that's where the challenge is. Is that correct?
We got a challenge since September 23, when Liwa Plastic has full capacity started. Some volume has been derived from domestic to Liwa Plastic. This move has been a little bit asked OQ to rationalize the volume and to come back to some official numbers who was in the system, who was the numbers of 10 years ago. Between official quota and actual lifting in 23, there was a big gap for NGC. It was much higher. But suddenly, OQ came back to the old numbers. which impacting us since September, reducing our quota lifting and having no chance when reducing some revenue. It's why you see the revenue impact of 24% in H1 compared to last year. We raised the points at the ministry level. The quota is managed by MOCI also, not Ministry of Energy. This is the problem also.
See, overall quota from the government for a local market is same. Once one or two players increases, that is rationalization between the existing players. So that is what is happening.
Get that. Now I'll just quickly jump to the main operation that you have, Malaysia, and I'll let my peers ask their queries. So just to summarize, Oman, the challenge is, you don't have a price increase. The operating costs have increased year on year. This new initiative of branding doesn't make sense if you're not allowed to increase cost. Now, would you still go ahead and participate in this branding if they do not allow any cost increase? Because that comes from your own sort of, let's say, P&L and your own cash flows, if I may ask you.
It's a mandatory. It's a mandatory. You have to do it.
If it's mandatory by law, we will do it because we are Omani company. It will have an impact from our P&L by minus 200,000 kilo per year.
Right. So even if this half a real increase were to take place, it would take place across the spectrum. What sort of impact would that have on your, let's say, cash flows or profitability?
$500,000.
$500,000, right. So net, your profit for the local market would increase by 300,000 riyal because the input cost of 200,000 as well, right?
Yeah, unless no other cost goes up along with that.
Understood. So the net impact, even if let's say all the queries raised by the gas companies are sort of accepted by the authorities to the maximum limit possible asked by the gas companies, you would see a 300,000 riyal improvement in net profit for the parent company. Right.
Yes.
Got that.
Yes.
Now the key portion of your business is the Malaysian operation, which contribute approximately 85% of your revenues. If you could just give us a quick summary of sort of the challenges there that you face over there. You mentioned, there are lesser players, 8 players for a 40 million market. And there it's the gas prices are regulated, are sort of a free market price, right? What are some of the challenges you face there? What are some of the margins over there? I mean, one of the things we've seen with the company is sort of, you have limited margins. What sort of margin expansion initiatives do you see that you mentioned about solar? So what is the target margin that the company can make if all things go well? And if you could just elaborate on some of these key initiatives or these key concerns and how you can tackle and what sort of margins you can look at if everything falls into place.
For Malaysia, as you know, volume is a little bit bigger. I think 3 years ago, we take a good initiative to put some hub. Hub means it's a platform under our name, managed by us, and we put a distributor over there to cover an area where we have no market share, to gain market share, and mainly in Kuala Lumpur, where we was not very strong like other region, for one reason. The product we was buying from the refinery was low vapor. We call it low pressure. In Kuala Lumpur, you have a lot of food streets, customers, very big, for Chinese New Year and so on. We was not addressing properly this one. Since 1 year, we have opened Westport's platform, which is Westport, a new terminal. It has been entered effective 1st of January 24, and we have a partnership with Equinor to buy 30% of our volume over there, high pressure. Thanks to this new store and this new terminal, we are now addressing, and it's improving first our volume by 4%. We see it in the numbers H1, improving slightly the margin because transport cost has reduced. And in the other region, we are trying to resist because competition is still existing on the market. Even you are the number 2 in the market after Petronas. To improve our margin, also, we have started solar, which is small product. Value, it's not big, it's not pharma, it's mainly rooftop projects. We have the team, we have the contractor, we have the license, we have the technology, and we have 5 reference, and we signed 25 projects, which will be executed in the coming 12 months. Second, we are diversifying by not natural gas, but pipeline. Piping means it's really buying the pipe, implementing the natural gas pipeline, commissioning, and it's a project base, which is not recurrent, but it's a project base which helps us to improve the margin because margin of this project are around 18%. Third one, we are looking about EV program. We have analyzed two companies to take over or to enter in a partnership with them. We are still in evaluation. We didn't find the right horse, but it can be one potential for us.
EV charging.
EV charging for cars, yes, excuse me. And the third one, we are also trying to look how to enter in natural gas distribution via the support of Gas Malaysia, if it's possible. This is another opportunity for us. And nevertheless, it's also geographical extension outside Malaysia. We are looking opportunities in Vietnam and in Indonesia with our base in Malaysia.
Okay, noted. All right. I'll let my peers ask their queries. Thank you so much for this. Wish you all the best.
Thank you.
Thank you. Anyone else? Yes, Joyce.
Hi, thank you very much. Can you mention about a little bit more about your new projects? You know, one is the Kasayan and the Saudi project, which you are very positive about. Starting with Saudi, can you give us some outlook on the market structure and the key developments? You mentioned that Aramco wants only two bottlers to be there. One is Gasco already there, and you are, you mentioned that you're likely to get a license in Saudi. So, what kind of license are we talking about? Is it for the second bottler or is it for distribution?
Okay. To give you, first of all, market size of Saudi is 1.3 million metric ton per year for domestic and bulk. 1 million for domestic, 0.3 million for bulk. The ministry has qualified us as technically because we are strong and we have a strong reference in Malaysia, and he wants to duplicate the model. Today, Gasco cannot afford to distribute the whole Saudi with the growth of the population mainly in Riyadh, in Jeddah, and population in Riyadh today is close to 6 million. It will be 10 million in 10 years from now. Jeddah is 4.5, it will be 8 million, and Dammam will be close, stable to 4 million. He wants some people from outside investor to support Gasco. Gasco has entered in another strategy. They have cut the company in 4 companies. One company is a transport company from Aramco to the bottling. Another company is bottling, Terwid. Another company is Hulul. Hulul is mainly engineering, installation, and bulk distribution. And another company will be the wholesaler. This is 4 licenses defined by the ministry. We have applied for the 4 licenses. For the time being, the Ministry Energy team has evaluated only 2, License 2 and License 3. License 1, transport from Aramco to bottler, is on hold, and License 4, wholesaler, is on hold. They say, let's discuss the first 2, which is the biggest investment, and after we discuss the others. Okay? Now we are discussing about the 2 licenses. License 2, cylinder bottling, and License 3, bulk distribution. The ministry has defined 3 zones. Zone 1, Riyadh and Hayl. Zone 2, Jeddah, Jizan. Between Jeddah and Jizan, you have 1,000 kilometers. And Zone 3, Al-Ahsa, it's the neighbor of Dammam. In each zone, he wants us to be able to get 25% of the volume of this area. To propose to targets in the next 3 years. Then we have volume. I give you one example. Zone 1, Riyadh and Hayl, we are speaking about 42 million cylinders per year. Zone 2, Jeddah, is 36 million. And Zone 3 is 22 million cylinders per year to fill. it's 100% of the zone I'm speaking. We need to take some share of it, and Gasco is willing to give it because the ministry will impose it. Number one. Number two, the good things with this license, the ministry will guarantee a minimum of margin for the bottling and for the bulk. Number three, I think he don't want to have so many players like in Oman. He wants to have 2 to 3 new players. Means Gasco plus 2 or Gasco plus 3 means 1 license in zone 1, 1 license in zone 2, and 1 license in zone 3. Means it can be 3 license addition. 4 cylinder and 3 new license for bulk. This is where we are discussing. The process today, there will be some criteria: expertise 37%, business plan 30%, and financial capacity 20%. This is the 3 criteria of evaluation. Financial plan, we are comfortable. We have a strong partner. Technically, we are comfortable. We have a good reference, and we have a strong team supporting us from Malaysia. And differentiation, Saudization, innovation, we have also some idea. We will put it in our bid. The probability we get the license is high. The last, only to give you, the submission of application will be done in October 14, and the announcement of the success applicant will be done on 14th of January, as per the ministry today.
Okay. And you said you will be partnering with you will be doing this bid with a partner. So yeah. Is it a Saudi-based partner?
It's a Saudi-based partner, very well known in Saudi.
Okay.
He's more of an investment partner.
It's investment partner mainly.
So they will bring in the cash on the table, and you will provide the expertise, technical expertise, what is required.
We have to finalize many things in that discussion.
But this is the frame, yes. The frame is to have a strong financial, and we are a strong industrial and operator.
And have you discussed on the shareholding structure? Will it be a subsidiary? You will be having a majority stake, or will it be kind of a...
It's too early to mention that. We'll be announcement once
we
finalize.
By end of the year, by end of 24.
Okay. And what's the ballpark numbers on the amount of investments that you're planning for Saudi? You said for the next 3 years.
We are still in assessment because some parameter has changed from the Ministry of Energy. I give you one example. The land has been changed, is a big land, then the assessment has changed and so on. The size of market, 25 or more, etc. We are still really on the working session. I think by end of October, we will have a lot of data and a lot of things we can share with you guys.
Okay, thank you. Highly appreciate your answer on that. Also, could you please provide some updates on the Kasayan project? Now, it's been almost a year since you signed the project. Kasayan is open, and when you announced the project, you mentioned that the total investment would be around 2.7 million riyals. So,
correct.
Yeah, so can you please share some
update is what? We have started operation 1st of July 24 in a temporary base with agreement with vegetable market management. We are working hand in hand, and we are managing 200 trucks per day today, providing parking, Wi-Fi, communication, security, food, and hotel. And we are managing the token relay with the vegetable markets. In a temporary area close to vegetable market, it's 1 kilometer far away. We have worked on the design, costing of the projects. The tender will be issued by middle of September, and the construction will start by end of this year. Then we hope that the full setup of the truck area will be fully operational in June 25.
Okay. And what's the financing structure, funding structure that you're planning to?
This structure, we will have a separate company managing these products as under the umbrella of NGC. But we are also looking to bring investor or partner to support us to develop it quicker and more profitable also. We are also discussion about a lot of service provider, garage, car wash, change, etc., to be able to make a little bit this product more profitable. We are discussion with a lot of partnership.
Okay. And what's the revenue model for this? Are you charging per truck for whenever there's a truck coming in, you'll be charging for that, and for the token structure?
The business model is to charge, to give 1 or 2 days parking free as per the contract, but we will charge for the hotel, for the food, for the clearance, and we are also trying to generate different revenue from EV charging for some trucks. They ask for charging for the trucks, for the repair, for the maintenance, for the car wash, for accommodation. They will be on need basis. But we are also trying to build up a new model with vegetable market to be fully service integrated in vegetable market, and no more to deal with the truck directly, but with the owner of the vegetable markets.
Or a logistic company.
Logistic company.
So parking is free. You're planning to generate revenue from the ancillary services.
Parking is free for 2 days only. Most of the guys, they stay 7 days.
Okay. Okay. Yeah. Thank you for that. And another question that is on the domestic operations during this year. You mentioned that there's a quota restrictions, and the quota restrictions has resulted in lower revenue. But at the same time, what I'm seeing is the domestic gross margins has increased this year compared to last year. What are the reasons for this?
The quota issue, as I told you, was raised. It's mainly concerning the bulk in the first 6 months. Okay? First 6 months, we got this problem of quota, which is now a little bit less than H1 due to this distribution of also the only source now in Oman for domestic is Sohar refinery. Before we was having MAF, we was having some option. Now it's also some restriction, but this problem will be a little bit less in Q4.
Someone asked about Khajan project payback period. Will be 8 to 10 years.
Okay. And Dr. Rashid, you said your budget for first half was around 100,000 riyals, negative. So will it be possible for you to share what's your budget for the full year, or maybe for 2025, what it holds for you?
25 we are not done.
25 we have done. We have not done it, the exercise, and we will present it to the board in October, end of October. For this year, we are doing the rolling forecast now today, but close we will be probably negative in Oman for sure. At a group level, we are still working on it because due to this Saudi development and Malaysia change, we are reanalyzing the margin purpose and so on. We will have the data, I think, by end of September.
Okay, thank you. And my last question is on on the industry as a whole. We have total of 28 players in the market. So where do you stand in terms of your market share? Your market share, do you have, and who are the major players? Can you name the 3 major players in the industry? And also, I want to pick your brain on your thoughts on a potential industry consolidation. We saw some initiatives a couple of years ago, but that didn't work well. It was completed, but that was the only thing that came to the limelight. So what are your thoughts? What are your thoughts on one?
Today in the market, we have 3 players, big. Muscat Gas, National Gas, Unigaz, which is also GCC player, outside player who has volume, who has well-known in the market. And after that, you have a lot of small, medium, local LLC, which is mainly having one or two plants at operation. Most of them are coming from UAE, like Sergaz or like Yamama and so on, which is a diversification of UAE represented in Oman, which was closed for them to have a small annex. I think we have two major players. It's clear the two SOG companies are making the market, are driving the market. We are trying to support the Ministry of Commerce, both of us, to change it and to make it more safe for the country. I hope we will succeed in our objective together and with the others. As I told you, for me, I was very surprised and really positively surprised by 11 companies signing the same letter, raising the same issue, raising the same problematic to the ministry, saying that something needs to change to be consistent in the future. You are right. We are too much. You are right. The market needs consolidation. But, this business is a regulatory business. You need enforcement. You need support. And you need clarity about what is the future. And also, as you know, hydrogen is coming. What is our future in 10 years from now? We need to work on it.
Okay. And what's your market share, Dr. Rashid?
Numbers are not clear. In domestic and bulk is totally different. As I told you, in bulk, we are leader. I think we have a big strength, close to 70% market share in bulk. In domestic, we have roughly around 40% in domestic, roughly.
Okay. Thank you very much. Thank you for answering the questions. That's it from my side.
Anything else?
Hello?
Yes.
Yes, one last query from my side. You mentioned initiatives in Saudi Arabia and they look very promising. Now, for some reason, if you were not selected as the second player for the Aramco project and the other initiatives went through, how do we see Saudi contributing to your bottom line overall? Because currently
I didn't say we are not selected. We are not selected. I said probably the Ministry of Energy in Saudi will select only two players for license one. License one is transport company. We are not a transport company. Transport company means from Aramco refinery to the bottling company around the whole Saudi Arabia. There will be two companies. It has not been discussed. It has not been started, but this will be the wish of the ministry in offline discussion. We have applied for the 4. We are now considered and qualified technically for 2. License 2 and license 3. Bottling and bulk.
And this Aramco sort of transaction for the rest of the Saudi, how do you see your visibility?
Again.
Aramco. Let's say, so Aramco is one massive counterparty. I understand that. But let's say if I exclude Aramco's business in Saudi, for the rest of the Saudi markets, how do you see your business visibility? Do you see it being profitable? Do you see the challenges persisting?
Aramco is the supplier. The biggest player right now and the only player is Gasco. Now the government is breaking up Gasco into 4 companies, and they're issuing 4 different licenses. Those licenses, different international companies, including us, we applied to those 4 licenses. 2 of the licenses now rolling, and we are shortlisted. The announcement will be in January, not yet. But we are shortlisted in these 2 licenses. Aramco, I will repeat, is only a supplier, a source
for everybody.
For everybody.
For everybody.
We are not competing with Aramco.
No, like OQ.
No. I didn't mean that. I said where you've been shortlisted. So let's say excluding what you're currently looking at, what you're bidding for, what you're licensing for, what the existing business that you're doing in Saudi, what visibility do you see for that? That's what I meant.
The,
Engine.
the business right now, which we have in Saudi, is basically engineering, fitting of pipes for, let's say, houses, malls, bulk industrial areas like this. But so far, there is no distributor plant except with gas pump. The breakup already happened. The issuing of the tenders, it's happening in January, and we are shortlisted to participate in it. So the announcement in January, inshallah, middle January.
All right, noted. Thank you so much once again, and wish you and the team all the very best.
Thank you.
Thank you. If there is no more question, we can close this session. Thank you for your participation. Thank you for your good question. It gives us a little bit more strength, and so I think thank you for your support, and we will see you in the next session, inshallah. Thank you. Thank you. Stop recording. End the meeting.